Hello and welcome to today's Cabot Wealth webinar, Smart Marijuana Investing plus 2 stocks to buy and 1 to avoid. I'm your host, Chris Preston, Chief Analyst of the Cabot Wealth Daily Advisory and Managing Editor here at Cabot Wealth Network. And with me today is Tim Lutz, Cabot CEO and Chief Investment Strategist and Chief Analyst of our Cabot Marijuana Investor Advisory. Today we're here to talk about marijuana, as you might have guessed. Doesn't get much more exciting than that, especially from an investment standpoint. Tim's going to tell you about this explosive new sector, share his strategies for identifying so many winners for his subscribers, and give you 2 marijuana stock picks and 1 not to pick. This is an interactive webinar, which means we will be fielding your questions after Tim's presentation. So if you have a question, feel free to ask it at any time, and we'll try and get to as many of them as time allows once Tim wraps up. Just keep in mind that we cannot offer advice in regards to your own personal investing situation or portfolio. First, let me introduce Tim. Like I said, Tim is CEO and Chief Investment Strategist here at Cabot Wealth. His father, Carlton Lutz, founded this business nearly 50 years ago from its humble beginnings as the Cabot Market Letter, and Tim took over the business in 2004 and has been running what is now a stable of 13 investment advisories ever since. Tim is always looking for the next big trend, the next big opportunity. And 2 years ago, he spotted one in marijuana and cannabis. And to capitalize on this booming industry, he started the Cabot Marijuana Investor Advisory in August 2017. And the timing couldn't have been more perfect. His recommendations have an average return of better than 180%, including 42% so far this year. Not bad. Long story short, Tim knows what he's talking about when it comes to marijuana stocks, so I'll step aside and let him do just that. Tim, take it away.
Thank you, Chris. Welcome, everybody. Before I get to my prepared remarks, I just want to say that last week I was at a cannabis conference in New Orleans, and some of this content is from there, so it's pretty fresh stuff. Slide 1. The legal marijuana industry is booming. Marijuana has been legal across Canada since last October. Recreational marijuana is legal in 11 states. Medical is legal in 33 states. And the numbers are just going one way, up, obviously. But every state is different. Illinois said yes recently. New Jersey said no. Also, one speaker at the conference noted that Massachusetts, where I live, which has been legal recreationally since December 2016, has had the slowest rollout ever. They're very careful. Short term, that's frustrating for consumers, but long term, it's probably a good idea as they're learning as they go and minimizing mistakes. In any event, the trend is clear. This is the fastest growing industry in America, which of course includes Canada. So, what's the difference between medical and recreational marijuana? The main difference is the label in the store. But I do want to back up and review the distinctions between cannabis, marijuana, and CBD. One of the cardinal rules of investing is to know what you're buying. So I want to cover some of the basics first. Cannabis is a genus of plants that encompasses both marijuana and hemp. Marijuana has THC. Hemp, which is bred to be full of oil, has CBD, plus more than 100 other cannabinoids. Hemp, which is bred to be high in fiber, is good for industrial uses. I won't talk about industrial hemp today, but I have more to say about the first two. Marijuana, of course, makes you high. Today's marijuana is stronger than in decades past, perhaps 4 to 5 times more strong than it was when I was in college. But marijuana smoking is declining fast, while other forms of consumption and delivery are gaining ground, from vaping to edibles to baked goods to beverages. Additionally, there is one overarching trend to all this. Marijuana users want repeatability of onset and duration. Like a glass of wine, they want it to kick in 10 to 15 minutes. They want it to last about an hour, not 3 hours like some edibles. They want a Starbucks experience, no surprises. Increasingly, they're microdosing, not getting wasted, just getting a little buzz, a little happy. And they're developing favorite brands. Brands will be a big deal in the years to come, but it's still early to talk about brands, so we won't get into that today. I do want to talk about baby boomers. I'm a baby boomer. A lot of you are too. Of those who use marijuana, 67% use it for medical reasons, 59% for social recreational. Obviously, there's some overlap there. A big goal is pain relief, which of course comes with age. Marijuana can replace common OTC products from aspirin to Advil to Aleve. And it's already cutting into the usage of alcohol, beer in particular, and opioids. Let's talk about CBD. 64 million people in the US are taking CBD. I take it every day. All these companies are selling it. But what does CBD do? Well, people say it helps with all these conditions and more: arthritis, nausea, insomnia, allergies, et cetera, but what we're lacking is hard evidence, hard clinical data to say exactly how it works and what dosage should be, et cetera. Nevertheless, people are taking it. 65% report that they find it effective, and they're even giving it to their pets, and the pets aren't complaining. Now, beyond CBD, there are more than 100 other cannabinoids in cannabis, and to varying degrees, that's in both hemp and marijuana, and they have effects too, still poorly defined. The modern pharmaceutical industry, of course, likes to isolate these compounds, the rifle approach, whereas proponents of holistic medicine prefer a shotgun approach. They tout the value of the entourage effect, which comes from consuming these substances together, the way Mother Nature packaged them. Which is better? I don't know. But it will be interesting and profitable to watch how things evolve and to stick with the winning trends. In the meantime, the government is part of the equation here. Last December's Farm Bill made hemp legal nationwide. So finally, studies can be done to show what those cannabinoids in cannabis actually do. So far, there's no regulation of CBD that comes from hemp yet. The government is trying to catch up, and they will. Just last month, the FDA had its first public hearing on CBD. There will be more. Eventually, we will have regulation, which I don't feel great about, but that's part of our life. And we will have scientific knowledge, which I do feel great about. I'm looking forward to it. The SAFE Banking Act, which would enable marijuana businesses to do normal banking operations in states where it's legal, has a good chance of passing this year, but it could be next year. The STATES Act, which would have exempt from federal law any entity that is in compliance with state law, will probably pass sometime in 2020. But again, there's no certainty. Every one of these is a big step forward. Back to my main point, business is booming. From black market to legal market. The customers are already out there. So just as of the end of Prohibition, way back in 1933, you just gotta switch them from black market to legal market. In my portfolio, the average company in the latest reported quarter grew revenues at a rate of 357% relative to the year before. That's huge. That's 14 stocks. There's no other industry where you can find growth anywhere near like that. Going forward, one analyst predicts growth of 25% over the next 5 years, but that's the entire industry. And my stocks will go faster. So in the long run, cannabis will be very disruptive. Recreational sales will top medical sales. CBD and other cannabinoids will top marijuana and THC. And cannabis will affect numerous other industries, including beverage, tobacco, beauty, health and wellness, insurance, real estate, recreational, and more. However, there will be, this is one of the things I learned at the conference last week, I'm getting a clearer picture now, there will be balkanization. That's my word. I didn't make it up though, but Canada, of course, had an early head start. Canadian stocks are first out of the gate, with Canopy getting big backing from Constellation Brands and Cronos getting backing from Altria. However, the population of Canada is 37 million. The population of California is nearly 40 million. So in the long run, the US market is going to dwarf the Canadian market. Furthermore, states will be resistant to buying from their neighbors when they can grow their own. California doesn't want to buy Oregon marijuana. Oregon doesn't want to buy Washington marijuana. So just as with alcohol, every state will have its different laws, and counties and cities and towns will have their own laws too. Again, parallels with the end of Prohibition in 1933. Back then, alcohol became legal and industry boomed, but every state did their own way, and distributors got power, which they still have today. Today, the beer industry has 37,000 regulations. Cannabis might top that. We have dry towns for alcohol, and of course, there are many municipalities that have banned marijuana selling in their own areas. So we don't have a word for that yet. The opposite of wet is dry. What's the opposite of, I don't know, smoky, not smoky, but people aren't smoking anymore, so I don't know what the word's going to be yet. But it's still early. In the US, legal states, 32% of people are consumers of marijuana, 32% are acceptors, and 36% are rejectors. The number of rejectors shrinks by 2 or 3% every 6 months as people become acceptors and then perhaps consumers. And I do have one point to make about that. Contrary opinion is a philosophy of investment that says in general, it's best to avoid what's popular and invest in what's unpopular. In the case of cannabis, that means that as long as there's still skepticism or fear, there's still potential for stocks to go up because the number of potential buyers grows as opinions improve, as rejectors become acceptors, etc. But when everyone loves something and there are no potential buyers left, that's when stocks top out. Clearly, it's many years ahead for cannabis. And many institutional investors are still on the sidelines, waiting for legalization, waiting for legal banking. We saw Constellation Brands buy a big piece of Canopy last year, but since then, none of the other big alcohol has waded in. They're all waiting. waiting for the next green light, maybe banking. In the meantime, we're in the midst of a massive land grab. The pace of acquisitions tops anything in the past 30 years. Every day, there are stories of acquisitions and partnerships. Eventually, when Fidelity and the other big dogs come along, valuations could soar higher, but they could also peak. Cannabis stocks peaked when marijuana became legal in Canada last October. Before that, they peaked when marijuana became legal in California in January 2018. And before that, they peaked when marijuana became legal in November 2016, when California voters chose to make marijuana legal. So watch out for those big fundamental milestones. The STATES Act, the Safe Banking Act, those could mark peaks when they arrive. Alternatively, you want to look for bottoms, the best time to buy. Bottoms, of course, tend to come when the news is bad. So look for bad news. Maybe someone who actually dies from too much marijuana. It happens many times a day due to alcohol. It doesn't make headlines. But if it happens to marijuana, watch out. Similarly, every day in the US, on average, 100 people die in motor vehicle accidents. We've accepted that as normal. At best, a vehicle fatality is local news. But when someone dies in a Tesla or a self-driving car, that's national news because it's novel. So if maybe someone commits a mass murder under the influence of marijuana, or a huge batch of brownies is contaminated and investors panic, that could mark the bottom. Keep your eyes open. At the end, of course, I'll take questions. So if you want to enter your questions anytime, Chris will take care of that as you send them in. Now, how to choose stocks. We coined the phrase, well, let's say one way is pure fundamentals. You can decide you want a Canadian marijuana grower or US CBD retailer or even a REIT that specializes in marijuana industry property. But the Cabot way is to look for these three things: story, numbers, and chart. By story, we mean business plan. Does it make sense? Can it bring fast growth? In the marijuana industry, one of the highest potential stories is that of the vertically integrated multi-state operator, or in Canada, multi-province. These companies grow the product, process it into both flowers and oils, package it, brand it, and sell it. Today, there are roughly half a dozen leading multi-state operators in the US, all working to be number one, and roughly half a dozen in Canada as well. One big fear going ahead is the commodity glut. Growing marijuana is relatively easy. A glut could hit growers hard. Farther upstream in the value chain, brands are expected to be resistant to that and more profitable too. But there are also companies in the industry that are not plain touching: packaging companies, transportation companies, and the REIT in my portfolio that's growing fast too. So I recommend diversification. Numbers refers to revenues and earnings. Though in the marijuana industry, not many people care about earnings yet. What they care about is who's getting big fast. So I look at the size of revenues of a company and the speed of revenue growth. I also look at valuation. Looking at the price sales ratio based on 4 times the latest quarter's revenues, this helps me see the cheaper stocks, it's all relative, as well as the most expensive ones. This measure is one reason I've been underweight rather, in Canopy Growth and Cronos recently. They're just overpriced and overowned. Finally, the chart. The chart is the easiest of all to look at as it unfolds every day. The chart is a big reason I've avoided Tilray and MedBen recently. Tilray is down from 300 to 34 before its recent bounce. You have a chart of that? No, sorry. MedMen is down from 7.5 to 2 before the recent bounce. And they're both still weak. Those downtrends might have ended 2 weeks ago with the market bottom, but too early to tell. However, Tilray is now cheap by my measurements, so I'm watching it carefully. One more word on what to buy. Diversification helps. Many of the stocks in this industry are low priced and they're volatile. So the more you own, the calmer your portfolio will be in general. My portfolio has 14 stocks. That's a lot, but I do recommend owning more than 2 or 3. Also, you never know what's going to work. So the shotgun approach is better than the rifle approach. Amazingly, the best performer in my portfolio has been the REIT, Real Estate Investment Trust, which is up an amazing 528% since I added it in November 2017. Not all my picks have been winners, however. I've had losers. What do I do with losers? I sell them, move on to better stocks. It's hard to learn, but once you learn the lesson, your portfolio will look a lot better. So today, while the marijuana index I follow is up 13.2% year to date, my portfolio is up 34.3% since the start of the year. Before this year, the portfolio was up 15.1% in 2018. That was a tough year at the end. But still, we had a good return relative to the market. And before that, from mid-2017 to the end of 2017, just as California legalization peaked, the portfolio was up 121%. That was lucky timing. All right, what to buy now? Organigram. Here's a chart of this year. The stock went from 3 up to 8.5, and now it's down to almost 2. I'm sorry, 6. Based in New Brunswick, Organigram grows marijuana in greenhouses and sells it in all 10 provinces and has international partnerships as well. The company boasts 3-level growing technology in its greenhouses and the lowest cost of cultivation in Canada. Its production capacity is on track to triple by year-end 2019. Organigram has an extraction partner, an edibles facility, and is setting up vape pen systems and a chocolate line. And the company has developed a beverage solution, a shelf-stable, water-soluble, and tasteless cannabinoid nano-emulsion formulation to provide an initial onset in 10 to 15 minutes in a beverage. In the latest quarter, revenues were $33.5 million, up more than 1,000% from the year before. Valuation looks reasonable to me at just 7 times revenues, and the chart looks healthy. However, I wouldn't buy quite here. I would see if the bottom is passed. This chart's 2 days old, and the stock is still around 6.2 or 3, so possibly bottoming right here, which is where it bottomed back in April as well. So technically, it looks like a good opportunity to get in this area. Next stock, Village Farms International. Had a great run early this year from 3 up to 18 and then pulled back to 10, and now it's building a base in the 11 to 14 range, calming down and looking like a good entry point somewhere here. Based in British Columbia, Village Farms is an experienced greenhouse grower, profitably growing peppers, cucumbers, and tomatoes in both Canada and the US. But it's embarked on a major shift, expanding into marijuana in Canada and hemp in the US. And given that it already has greenhouses and experienced management, I believe it has a head start over many younger competitors. In Texas, for example, Village Farms owns and operates greenhouses that total 5.7 million square feet. One of those in Monahans, Texas is named the Permian Basin Facility, and it's one of the most advanced greenhouses in the world, using computers to control irrigation, fertilizers, carbon dioxide, light, temperature, ventilation, humidity, and other factors. In May, the company announced that it had begun conversion of half of this 1.3 million facility for cultivation of both high CBD hemp and CBD extraction. One big advantage of being in Texas is they have enough light for year-round growing. No artificial lighting needed. Sunshine is enough. That makes it cheaper. In the latest quarter, revenues was $37.3 million, up 26% from the year before. That makes Village Farms the slowest grower in my portfolio, but also one of the lowest risk investments. Valuation is low at just 4 times revenues, and the chart is healthy. If you like the story, check it out and buy around here. Finally, what to avoid. The Green Organic Dutchman. Based in Ontario, the Green Organic Dutchman is committed to organic cannabis, which currently enjoys a 30% price premium. According to the company's studies, 61% of medical patients and 50% of recreational patients prefer organic cannabis. The rest, however, may not care or simply may value price above all. In any event, the focus is not working so well for this company yet. In the latest quarter, revenues were $2.4 million compared to nothing the year before. The stock is expensive based on my measurements, selling at 69 times revenues. And the chart shows a downtrend from 4.4 in March to a new low of 2.4 on Monday. Long term, the company does have potential with international agreements and edible as part of the attraction. So I'd like the stock to be trending up, not down. And I'd like it to be cheaper too. So that concludes my presentation. Now we'll have a drink of water and Chris will have a few words.
Yeah, please do. Yeah, thanks, Tim. Yeah, I'll give Tim a minute to catch his breath and before he starts answering some of your questions. I see we've got plenty of them already. While he does that, I'll just tell you a little bit about how you can sign up for his Cabot Marijuana Investor Service. Actually, we're making it quite easy for you. We will receive an email in your inbox shortly after we wrap things up here today that has a special discount offer exclusively for today's listeners. And what you get when you sign up for Cabot Marijuana Investor are Tim's incredible marijuana stock trade recommendations. Again, is a 182% return among his 14 stocks right now. And you also get regular updates on the marijuana, or what's happening in the marijuana stock market and the status of current trades, plus ongoing education on how to play this fledgling market. And you also get email access to Tim. He's available to respond to questions whenever you have one, which is probably quite frequent in a market that's sort of this early in the going. If those sounds like the kind of returns, 182% you're looking for, I highly recommend you subscribe to Tim's advisory. So again, look for that special offer in your email inbox shortly. Let's get on to questions. Let's see. We've had a few about what your criteria is, Tim, for selling losers.
Okay, great question. The flip answer is when you can't sleep at night, they say I sell down to the sleeping point. I sleep pretty well generally. I have one sore thumb in the portfolio right now with a loss of 26% as of today, which I bought in mid-March, and it's on the edge. But partly it depends on your exposure and your weighting. If it's half your portfolio's value, that's tough. But if it's only 1% of your portfolio's value in that one stock, that's not so tough at all. So every case is different. And what you're trying to do to get more elaborate is, in this portfolio, I'm trying to help people own the leaders of the industry 5 and 10 years from now. You want to buy Microsoft 10 years ago, right? Or Apple 10 years ago. You want to get the leaders early. And so maybe in that case, if you think you have a good stock, you just bought at the wrong time, maybe you just lighten up a bit and have a smaller concentration in it so it's more comfortable, and then you can buy more later if it recovers. So a lot of these stocks I just ease in and ease out to varying degrees of weight. Hope that helps.
Yeah, good question. Let's see. So Tim, you mentioned Tilray, the big drop in Tilray earlier. I have a question related to that. How do you explain the wild swing in marijuana stocks like Tilray, and is it representative of what we should expect from marijuana stocks in the future?
Well, Tilray was rather extreme, very highly promoted, highly popular. I'm not sure exactly why, but there was just way too much buzz around it. And it went too high as a result. I'm tracking 141 marijuana stocks in my master list, but only less than half of those are liquid enough or have a market cap high enough for me to really pay attention to. As far as swings, so volatility comes partly from liquidity. We don't have enough institutions in yet to guarantee, well, to provide good liquidity and smooth trading. Sometimes these get pushed around by big money coming in or big money jumping out. So liquidity comes with maturity, and we're getting there. It's better than it was 2 years ago, but it's still not up to standards of something like Cabot Growth Investor.
Here's a question just of clarification from Elizabeth. Can you quote the approximate numbers for your ideal entry to OGI and VFF? I hear you say get in here, but do you mean, it seems like you meant where the stock is trading now, correct? Where both those stocks are trading now?
Generally, yes. With OGI, you see, here's the chart, you see bottoms near 6 in both April and March. If the stock holds at 6 in the days ahead and starts moving up again, and ideally with more volume, that'd be a great clue that the bottom is passed. If it falls below 6, then I don't feel so good anymore. With Village Farms, I feel better, definitely about that. And I would enter anytime here. After studying the story a bit, make sure you understand what you're buying. This is, as I said, the slowest grower of the group. So it's not going to be unlikely to be a big winner, but I could be surprised. I'm surprised that the REIT is the biggest winner so far. That's partly because in today's market, people like security. Our dividend newsletter is doing great. People love dividends. And so the market, that's a sweet spot. You got a safe cannabis stock in a REIT. But I generally like this chart right here.
Okay. Let's see. Here's a good question. Is there anything on the federal government level that would change your overall thesis on the marijuana sector?
I'm a big student of trends. When I first got into this cannabis industry 2 years ago, it was really a trend call. I can't tell you the timing at all of government actors, and that's just wasting my time to try to even guess. But the trend is clear. The states are behind the trend, and there are still 39 states to go to legalize recreationally. So, so the answer is no. I don't think anything the government does is going to stop this trend. It's just a matter of speed and time.
Okay, and another one, are there any super speculative marijuana stocks that are on your radar now?
Oh, no, these are they're speculative enough.
Yeah.
And I told Chris this earlier. Well, let's see. 2 years ago when I started, the majority of the stocks that I put in the portfolio were below $10 a share. Now it's about 50-50, half below $10 and half above. So they're growing up slowly. In most Cabot publications, we like them above $10. That's a little more, the institutions like that. They're more grown up there. So these are getting there. Maybe they're in high school right now.
Question from Barbara. Been waiting patiently. She simply asked, why are marijuana stocks going down right now?
Well, we had a market correction over the past month in May, and marijuana stocks have not rebounded as quickly as the broad market. Let's say that. I don't have a good fundamental answer. The goal is to stay with the leaders. There's no question that they will rebound. But to answer the question simply, they're going down because people are changing their perceptions, moving money elsewhere. In some cases to the more high profile marijuana stocks, but I'm looking at Cronos and Canopy, of course, as the most overvalued popular stocks. I don't think they're good bets here. I think they're cautious bets. I don't think they're good high potential bets at this point. But maybe more of the money is going there from the smaller ones.
Okay. This stock, Stuart has a question about a particular stock that just debuted, just had an IPO called Akerna, KERN is the ticker symbol. This could fall into too speculative, but it's up 75%. He says, could it be another Tilray? It's a software stock apparently.
KERN. Let's see if I can make that appear. No, send me an email.
Is something that just has just debuted, is that something you generally steer clear of IPOs anyway, right?
We do. We want to see, well, historically, Cabot wants to see a chart 3 months long. In recent years, we've been cutting that a bit down to 2 months or to 1 month, but no, IPOs, no. There's no rush. IPO often stands for it's probably overpriced. So, but I will look at it if you send me a quick email.
Okay. Question from Henry. Make sure I understand this question right, but do you think U.S. stocks are undervalued compared to Canadian cannabis stocks?
Well, it's interesting. At the conference, people did indicate they thought the Canadians were overvalued. And perhaps they're talking about the leaders up there, as I said, Canopy and Cronos. I don't have a strong opinion. On the other hand, going forward, it's clear that the US is going to outweighs Canada easily once we get rolling. And to some extent, I do believe investors are seeing that come along. The early money went to Canada. Now, as they see the US, first the Farm Bill, now the States Act and Safe Banking Act are coming along. So yes, to some extent, money is coming from Canada, which was overvalued, into the US stocks.
Okay. I think we have time for one or two more. Let's see. Scott asked about Aphria, APHA. Was hit hard by a big name short seller in the past. Do you expect it to be a buy now, and if so, why?
I like Aphria now, yes. It was hit hard last December, I believe. And potential, well, a lot of these companies have young managements. They are growing so fast, they make mistakes occasionally. Aphria made some mistakes being a little rushed in some acquisitions, not dotting all the I's and crossing the T's, and short sellers came in up the stock down, but it's come back nicely, and I think I like owning it now. I have it as a roughly market weight in my portfolio, and I think it's one of the potential contenders, potential leaders down the road, and it's not as overvalued as some of the most popular ones.
Okay, let's see. One last question. Another stock specific question. Hexo, what are your thoughts?
Hexo, I like that too. Used to be called a much more complicated name, Hydropothecary. They fixed that quickly. And yeah, it's one of the Canadians that, again, has good potential and is not as overvalued as the leaders. So I like it.
All right, well, thanks, Tim, and thanks to everyone for all the great questions, and thanks for joining us today. We'll be back next month on July 23rd at 2 o'clock Eastern with another webinar, this time featuring Nancy Zambell, editor of our Wall Street's Best Investments and Wall Street's Best Dividend Stock Advisories. You can sign up now for that free webinar titled Top Stocks to Make You Money Now, regardless of investing style, by going to cabotwealth.com/webinars. Also, we're holding our annual Cabot Wealth Summit in Salem, Massachusetts, this August 14th through 16th. A chance for you to meet other individual investors like yourself, meet all of our Cabot analysts, hear their latest investment advice and stock recommendations, and enjoy summer in historic Salem, Massachusetts. It's a great event. If you're interested, you can register at the cabotwealth.com website. That does it for us. Tim, unless you have any last words of encouragement.
No, thank you very much, Chris. Thank you, everybody, for listening.
Yeah. And for Tim Lutz and the entire Cabot Wealth Network team, I'm Chris Preston. We'll see you next time.